Hey everyone, welcome back to Corporate Decoder, the place where we find out if your favorite companies are secretly printing money or just, well, you'll see. Today we're diving into a filing from Applied Optoelectronics Incorporated, and let's just say they're looking to raise quite a bit of cash, potentially making an interesting move in the market. Before we get into the nitty-gritty, if you like getting straight to the point explanations of these complex corporate documents, smash that subscribe button. And for even more insights and to join our growing community, you can find a link to our Discord server in the description below. So what exactly is happening here? Applied Optoelectronics Incorporated, or AOI as we'll call them, has just filed a current report basically letting everyone know about a significant event. And this event is all about money. The main story here is that on the 7th of November 2025, AOI inked a deal with a couple of agents, Raymond James and Company Incorporated and Needham and Company Incorporated. Think of these agents as the folks who will help AOI sell some of its company stock on the open market. And not just a little bit of stock. They are setting themselves up to sell shares of their common stock with a potential value of up to a whopping $180 million. This is a pretty big deal, and signals they're looking to significantly boost their cash reserves. How will they do this? It is called an at-the-market offering. This means they're not selling a fixed block of shares at a set price. Instead, they'll be selling shares gradually when the market price is right, likely through the Nasdaq Global Market where their stock is already traded. They can even adjust how many shares they sell and when, giving them a lot of flexibility. They are not obligated to sell any shares at all and can stop anytime they want. Now, these agents aren't doing this for free. AOI will be paying them a commission of 2% for every share they successfully sell. That's a pretty standard fee for this kind of arrangement. On top of that, AOI is also covering some expenses for the agents like legal and filing fees with a cap of about $10,000. And if things go sideways and they don't sell enough shares as planned, they might have to pay even more, up to $30,000 for expenses. The specific stock they are looking to sell is their common stock, with a par value of just a fraction of a cent. This is typical for common stock. Their stock trades on the Nasdaq Global Market under the ticker symbol ABOI. If you are familiar with the company, you'll know this is their main exchange. The filing also mentions that they have registered a lot of shares, over 230 million in total. Although this specific offering is for up to $180 million, this suggests they have a lot of room to issue more stock if needed in the future. There are also legal opinions included in the filing from a law firm called Haynes & Boone, Incorporated. This is pretty standard stuff, basically confirming that the stock issuance is legal and complies with regulations. So, what is the big picture here? Applied Optoelectronics Incorporated is essentially arming itself with the ability to raise a substantial amount of cash by selling its own stock. This can be a smart move for companies that need funds for growth, research and development, acquisitions, or to strengthen their financial position. It gives them flexibility without having to take on debt immediately. However, it's also important to understand what this means for existing shareholders. When a company issues more stock, it can dilute the ownership stake of current shareholders. Imagine a pie. If you have more slices of the same pie, each slice becomes smaller. So while AOI gets more cash, your percentage of ownership in the company goes down. This is why investors watch these types of filings very closely. Now, looking at this filing, the most important part for us as investors or observers is this clear intent to raise a large amount of capital. They've set up an at-the-market offering, which means they can be quite strategic about when and how they sell these shares. Will they execute this perfectly? Maximizing cash inflow while minimizing negative impact on their stock price. That's the million-dollar question, or rather the $180 million question. On the surface, this looks like a company positioning itself for future investment and growth. The fact that they are using an at-the-market offering suggests they believe their stock is reasonably valued, and they want to capitalize on that. It's a sign of confidence, or at least an attempt to project confidence in their business prospects. We don't have specific financial tables in this particular filing that show revenue or profit figures for the latest period. This is a current report highlighting a specific event and agreement. For detailed financial performance, we typically look at their quarterly 10Q or annual 10K reports. However, this agreement itself is a strategic financial maneuver. The key takeaway is that Applied Optoelectronics Incorporated is preparing for a significant cash infusion. This could fuel new product development, expansion into new markets, or perhaps even acquisitions. The success of this strategy will heavily depend on market conditions and how effectively the company and its agents manage the stock sales. Alright, that is our breakdown of Applied Optoelectronics Incorporated's latest filing. What is your take on this move to raise up to $180 million? Do you think it is a smart play for growth, or a sign of underlying financial pressure? Drop your thoughts in the comments below if this deep dive was valuable. Hitting that like button really helps us out, and subscribe for more straightforward corporate analysis. And don't forget to check out the link to our Discord server in the description. Thanks for watching, see you next time.